The market is changing very quickly right now. And depending on how many deals have been done in your market, there might be a lot of changes that are taking place on a week over week basis. The biggest push for this, of course, was the change of interest rates. How's it going, everyone? Welcome back to the show. Today, we're going to talk about what to do when you miss out on deals, and what to do when deals don't pencil, and what to do when you can't possibly imagine paying so much for a deal and you just saw something trade and you're like, that's disgusting. We're just going to be out here sitting on our thumbs for the next couple of months. I get it. So first of all, let me tell you, this has been my experience for the last 12 to 13 months. About 24 months ago, my partner and I decided we're going to go all in on Phoenix, Arizona multifamily apartments. We have raised capital for 7 transactions across 9 properties in Phoenix already at that time, but had done it as a capital partner where we were partnering with other operators to rely on their back-end infrastructure. And we were just acting as a capital raiser, under a broker dealer at the time. But around that time, my partner and I decided we're going to go all in. He actually moved from Michigan all the way to Phoenix, and we've had incredible success since then. Our properties are really overperforming. I mean, it's been pretty awesome. The deals we've purchased on the GP side, meaning not as a capital raiser, but as a general partner, are crushing it. We just looked at one of the deals we did 12 months ago. This is insane. We're actually 57% above projections net on that deal. It's in Peoria. It's absolutely amazing. Now, is that going to be something we happen every single deal? No, probably not, but it's like, that's what happens when you're super intentional and you control stuff, and it's been amazing to see. However, our goal was to buy 4 deals over the last 12 months, which is standard, right? A deal a quarter. Well, what happened? Deal flow went down by 85%. So that goal of doing a deal a quarter, if you look at that on an expected outcome basis, what's 4 times 0.15? Not a lot. It's less than 1. So it's been 12 or 13 months. We have a property that's under LOI, hopefully will be under contract in the next couple of days, and I can share it with you. But for the last 12 months, we've been doing what I'm about to talk about, which is underwriting deals, touring properties, touring comps, trying to be in the game, but missing out on the few deals that were available. And it's messed with our minds. It's difficult economically because these businesses don't really make sense unless you're buying and selling deals. It's difficult mentally, because it starts to mess with your mind. Are you not looking at things correctly? Are other groups being more aggressive, or are you not being aggressive enough? It's difficult. So I wanted to give you the playbook that we implemented for this, and also some stuff that we didn't implement for some reasons I'll go into, but that you might be able to. So if you feel like you're missing out on deals, if you feel like you're getting squeezed because you've got to do deals to be in this game, number 1 is stay calm, okay? This is a critical moment in your career. If you're listening to this show right now, when deal transaction is down, it means that people are only selling if they're distressed. Okay, so when you buy distressed deals, the upside is massive. So stay calm, stay the course. Something else I want to share with you, though, is that make sure to get as much information about the market as possible. So if you go to bid on a deal and you bid $17 million and you find out that it was purchased for 22, right? That's a massive difference. And so don't just say, well, we lost the deal, end of that, let's move on. That's all we can learn from it. No, you've got access to inside information that you probably wouldn't get access to if you weren't bidding on the deal, AKA, the broker. If you're bidding on the deal, you can keep in touch with the broker to make sure the deal actually closes, because I've seen a lot of these deals where you miss out on a deal by $5 million. Guess what? That buyer doesn't know what they're doing sometimes, and they don't end up closing. So if you're constantly texting the broker, hey, is that deal still closing? Are things still moving forward as follows? Did the money go hard already? And trying to constantly stay in touch with the broker to make sure they know you're still in the game and you're still interested. And then after the deal closes, here's another tip. Hey, did that deal actually close for 25 million or 24 million or whatever the number was supposed to be? Let me ask you something else. Who else bid on that deal, right? Because now you're starting to get a sense of who's participating in the market. If you're buying other deals that are like that deal, Maybe you can start to build up your list of potential sellers that you can buy other deals from, or buyers that you can later sell a deal that you own to. So just because you missed out on a deal and the deal went under contract for more than you were willing to pay doesn't mean your research stops, right? So continue to stay in touch with the broker until it closes, and after, by the way, for other reasons. Get as much information as you can. And then in Excel, I would always track these deals. Why? Because it gives you incredible market insights. If you're bidding on a deal, that means you had access to the P&L. You know more than most people what the true cap rate of that deal is, what the true valuation of that deal was internally, so that when things change, you'll be the first to know if you're actually tracking all these deals that you're making offers on, doing due diligence on, and touring the comps of, which is a good kind of segue to my next point, which is that the market is changing very quickly right now. And depending on how many deals have been done in your market, there might be a lot of changes that are taking place on a week over week basis. The biggest push for this, of course, was the change of interest rates, right? So the Fed recently went from raising rates, faster than they've risen in 40 years, to now a lot of talks about reduction in rates, to now the first rate cut in quite some time, and the anticipation that there's going to be more rate cuts in the future. So what took place? Well, the 5 and the 10-year Treasury dropped dramatically. And because they dropped dramatically, and usually when people are buying deals using 5 and 10-year kind of treasuries as the guidepost for how expensive their loan will be, in markets where deals have been transacting, valuations have increased. So if you're playing the game with data that's 2 months old and not staying abreast of the market dynamics, you're going to be submitting offers based on comps that are outdated. So you need to understand what's taking place. What is the impact, the changes in the economy, the changes in interest rate? What is that impact actually having on valuations? Because in a changing environment, if you're 3 or 6 months behind the curve in terms of where your max offer might be, you might miss on every single deal and things until things normalize. And guess what? When things normalize, you know what? All the great deals are usually going to be taken at that time. Here's another strategy though, and we aren't implementing this, but I want you to know about it. What I've seen a lot of groups do when deal flow dries up or they can't make deals make sense in their market, it might be a good idea to broaden your horizons by thinking about partnering with other groups in other markets or other strategies and other asset classes, or implementing a fund of funds. And I have seen both be incredibly helpful for people in the Raise Masters community, where I'll give you a perfect example. Aspen Funds is a group that has a very robust background in the non-performing note space. Ben Frazier not only is a member of our mastermind, not only has he raised more than $100 million himself, his group has raised billions of dollars, he's also a coach of ours. And so because he's a coach, he's able to access and see many of the members as they come to our community. And because of that, he's actually partnered with several Raise Masters in their various niches and other non-Raise Masters in the community or outside of the community. And so what this has done is that, let's say the non-performing note space dries up. Let's say something changes in the economy or changes in the regulations where that play isn't as available as it was. Well, maybe they can pivot, co-GP with another group, or create a fund of funds with another group. They can 10x their deal flow, allow their investors to get diversification out of the non-performing note space and into something like oil and gas, which they've done, or multifamily apartments, which they've done. Now, they're not a jack of all trades, but they might be very good at finding quality operators in quality markets. And so that's a very good institutional quality operator that's doing this right now. It's not just for beginners who are figuring it out and want to partner with people to rely on their track record. Far from it. So there's a couple of strategies I'd say. And like I mentioned, ASIM Capital, we've got something that's not quite under contract or might be under contract by the time you hear this if you're listening on a recording. But if you want to partner with us on our next deal, or you want to invest, or you want to get access to our infrastructure, just go to asymcapital.com. At the top of the banner, there'll be a prompt to book a call with my partner, Tyler Lyons, and we can talk about why we're so excited about what's going on in Phoenix. And by the way, if you haven't yet been a part of Capital Raisers Edge. We are having an absolute blast in here. We've got hundreds of Capital Raisers and Capital Raisers Edge. Just go to raisingcapital.com/CRE. You can get access to some incredible closing scripts, training modules, plus you can join this live. And after this, I'm going to jump and do some live Q&A. You only get access to that by joining Capital Raisers Edge. So like I said, raisingcapital.com/CRE. I'll see you there.